Welcome everyone to the Kindle Report. It is Friday morning. Hard to believe another week has went by. It's kind of been a crazy week between all the crypto going on and just in general market directions. Make sure you subscribe and hit the notification bell and hit the like, most importantly. Yeah, so yesterday, think about what the dialogue. Yesterday, everybody was worried about the Fed was going to over-tighten. Market was down. What it was an opportunity to buy. That 3,900 level was rock solid. Here we are at 3,985, trying to print back up to 4,000 here. And, I talked quite a bit about that, especially in the live room. We hammered on that a lot. We saw several tests of the lower end of the support yesterday intraday, and it just held solid. And a little bit of a bid in the end of the session, and then overnight we're seeing some decent stuff here. So so let's do a quick look around what's going on here, get set up for the open here. We got about 10 minutes to go. Right now, treasuries have bounced back to about 380, 379. And we're looking at, I think, more stability as we go forward. Next week, we're going to see a definite pattern toward around back in the 380 handle. I think on the treasuries, we printed down into the 6 handle. 368, I think, was the low. That's a pretty phenomenal number considering what's going on here. But just looking around here, gold's off a little bit. Dollar's flat. Nothing's really going on there. NASDAQ up 1%. The E-minis up 0.8 and RTY up 1% as well. So decent bid here. And as I've been talking, overall I see what's likely to continue to go on is this bias to the upside for a while. And we're really just consolidating here, trading between 39 and 4,000. We did print up to 40.50 just the other day. So we'll take a look at that. I'll save some of the details here as we get into the session here. The setups that I've been giving you every day, I think have been pretty spot on. I've already looked at the algos, and I'll go through those after we get through the opening. But it's very interesting the way the setups have all been running on the hourly algos have been really mapping out the day pretty accurately all week. I think you folks, I've seen a lot of comments, and especially on Discord, I've seen some really nice comments about some of the activity. So we'll continue along this format. Like I said, just reminding everybody, I will not be here Monday morning. Sunday night, I'll do a broadcast, and I may do a pre-broadcast and then have a premiere on Sunday night. Typical time that I always do, it'd be 10 o'clock Eastern. Might do it at 9 because of the time change, because I don't change times. I'm in Arizona, so we don't change clocks with everybody. I wish we would. It would be a lot easier. But anyway, just taking a quick look back, we got still have about 7 minutes to go on everything as far as the opening goes. So I think that I mentioned, and I'll go into more details here, but the Fed they want to destroy the employment. They want you unemployed. That's how they're going to fix inflation. That's their brilliant idea. So it's going to get very, very interesting. I'll talk more about that when we get into the main dialogue of the day. Just to kind of set up a couple of things, I'm going to go through some longer term aspects. Since I'll be live on Sunday, I won't have to set up things, but there's some very interesting things going on with the database. And I think this coming into next week is going to be a major event. I'll talk to you more about that here in just a minute. So just looking at what some of you folks are talking. Yeah, good morning, everyone. Appreciate you being here. The Fed doesn't, they don't have a playbook. I appreciate the comment. I think that they're just winging it. Not one of them, as I've said before, had any idea that we'd be in pushing a four-handle Fed funds. There wasn't one that had anything over 0.75 a little bit over a year ago. So they have no clue. They're just kind of winging it as they go. I was watching one of them speaking this morning. I forget her name, but it was like being in a very boring college course, and you're like, why did I take this course? I don't want to listen to this person talk for 3 hours a week. So anyway, the point is they don't really have a clue what's going on. They do have, I don't know if you call it a playbook. They're just doing what, maybe it is an old dated playbook, but there's no other playbook that's ever been used. So we won't get into talking about the Fed at the moment. We got about 5 minutes to go here. We pulled back just a little bit. We were trading in the 90 handle. We're back at 86 on the S&P. Oh yeah, let's get through. I'm acting like I don't have something to do. Let's get over here and do the market grid real quick. Sorry about that. Let me bring that over on screen for you. And so daily market grid, this is interesting. This is the S&P futures. 39.98 is R2. So we've already done R2. S1 39.43. We were down to 43 exactly. So those of you that have this market grid, that was there was your last buying opportunity there on an S1. So S1 R2 so far already printed. So the question is, do we print an R3 40.17? Not sure there's anything out there to push it that hard, but it looks like the algos are all set. We'll see how we get off from that standpoint. I will show you when I show you the algos for the hourly charts. They are suggesting across the board a little more strength for a few hours, at least to maintain where we're at or slightly higher. So maybe R3 is a possibility. So as far as we've already printed the range, that's I kind of missed it. Like I said, I keep missing the evening sessions because we would have talked about that, and the overnight would have been there. Best way. I don't need to talk about it if you get the indicators. The links are right on the top of this the screen here. Let's go over to the NASDAQ. We got about 2.5 minutes to go. NASDAQ, similar type scenario, high 11,843, R2, 11,862, so we're just shy of R2, S1, 11,638, and the low 11,672, so we're just kind of in between that S1, R1, R2 right now. And I think like I said, this pattern, I talked about this the other day, just looking at the market grid. This is what I refer to as a dragon head, and that those patterns resolve themselves to the upside about 60-70% of the time. So it looks like we've got a chance at the market grid turning up. And when we get into after about top of the hour, I'll get into some of these things as far as the quarterly chart. I want to show you a couple of things on there that I think how we're setting up this year in and how we're going to look into at least the first quarter of 23. So everybody's already starting to forecast what is likely to go on there. So let's go ahead and look at the RTY. RTY, we're looking at the S1 was 31. We had a low of 36, 1836, high 1864, R2 1866. So everything's printed in that range already on the overnight session. So really just the only thing, I don't see us getting below S1. I do. There's probably the only potential here is for us to get above R2 and maybe print into R3 on all of these markets. So let's go. Let's see where we at here. Yeah, we're any second here. Let me get set up on the right screen for the open. And so we should get a bell any second here. Getting a little bid coming in on the open here, back into the 90 handle. All right. Pretty steady bid coming in here. There we go. Okay. Yeah, sorry. For those of you that are getting the delay, if you scrub backwards and then go forward, you get rid of most of the delay. And you can also go 2 times on the live stream. It will catch up. So if you want to get rid of that delay here. So anyway, so as always, we watch this first volume bar over here that's coming in on the 5-minute. And so we're seeing a little bit of a bid coming into the open here. And order book as always thins out. We get a lot of erratic movement here as always. Nothing really featured here from that standpoint. I'm going to go over to, let's go over this screen and just see what's showing up. The TQs, Tesla has been on the top, 41,000 shares. So they're starting to crank up, just seeing who's coming in to the active list right now. Bitcoin has been stable here. It's pretty amazing. It's just all the craziness around that. I'll go through that later. But we're just really seeing a little bit of selling coming back in. We'll come back and go to this level 2. So here we are, big reversal off of this last minute, getting some selling coming in. Let's go over, I want to show you something. We'll start here getting into the algos a little bit. But let's take a look here, and let's go to, this is a 1 minute chart, and we're seeing some erratic type movement here. We're trading down pretty good here now at all the way down to 82. So this is the biggest sell-off that we've seen here, taking us back to where we were around about an hour ago, about 4 minutes ago actually. So we're still seeing some pretty decent selling coming in. It looks like the algo wants to try to bounce here, so we should start to see some stability. I'm just going to go over to the 5 minute graph. You can see outside bar 5 minute. Just got an update just on the algos here, and they're leaning negative, so it looks like we're going to get a little bit of a pullback to start. So let's go into the hourly and see what that's set up. You see we've got, it looks like maybe we're going to stay above the 10 period moving average right now, 69. That's rising, should be about 74 to 76 on support here on the S&P. Looks like maybe a little bounce out of that level, but then ultimately we're going to see the upside start to dissipate. So we could set back and challenge this around 70 level. If we get under the 70 level intraday, then it looks like we've got a pretty decent potential fade into the close. So all of this strength that's looking at right now looks like toward the end of the close, toward the end of the session, we're going to see at least some downward pressure here on the market. So we started off at the high point of the day, basically, and now we're going to consolidate. Looks like for a couple hours, and then some potential selling at the end of the session. Unfortunately, we won't be in a live room to cover that today, but that looks like the setup. Let's go over here and put the NASDAQ on here. Sure, these are all going to look very similar. Yeah, same thing here. NASDAQ is suggesting we're already trading at the 10 period moving average on the NASDAQ, so 11,673. So these averages down here, the 21 and 40 period moving averages are slightly up, so there's going to be some support at those levels. That's around 745, 11,745. Same kind of scenario here, though. This, like I said, these are the hourly charts we're looking at right now, and this is looks like PPM1 is saying we're going to get into a steep downtrend, which means the market's going to trade under the 10 period moving average. That's 11,763. So look to those market grid here. Maybe S1's more in play. I've done this a couple of times this week. Once we get into the review of the algos, all of a sudden there's some weakness. The other day we saw this, and we were projecting down to S2. So maybe S1 is a retest is coming in, but it looks like pretty much sideways to down, and the down is being projected to get reasonably strong on the downside here. So let's take a look at the Russell. Russell's got a different pattern. Basically got a little bit of a bounce here. Russell's showing that we get maybe a couple hours of stability. We stay above the 10, and it looks later in the session. So everything looks like stable, flat. We should hold some reasonable support levels if you're running, like I said, looking at the intraday market grid for that standpoint, and look for some stability to come in somewhere on the S&P around 70, here on the Russell right at the 200, which is 53. We've had a 51 low, so we printed down from that standpoint. And last is back at 62, so we've already bounced off of those levels. So yeah, so I've talked about this quite a bit. The Russell has quite a bit of a different technical formation. So let's get into database. We'll get into our normal flow and get into the session here today. Okay, so this is what's going on here, folks. This is amazing, actually. We're at 79.51% bullish, 80% of the symbols. So 12,688 of the 16,000 symbols are generating buy signals right now, which means we're in trend mode. And I'm going to attempt to bring up a video here in a minute that I've been wanting you all to watch. So give me just once I finish the overview here, I'll bring up that video. I meant to have it queued up, so I'll get that queued for you very soon. Matter of fact, I've got it ready to go. So I will play that. Hopefully, we can get the sound and everything going just right. But the point of what's happening here at 80%, this is pretty much maxing out. But that doesn't mean this is the top of the market. This tells us that this is a maximum amount of stocks, and what will start to happen, just like all these indexes, let me go open up a full page here. All of the sector indexes are different cycles. Some of them came in early. Some are already up 32 days long. So those are where a lot of the early cycle trades came from. So we got, trades in conglomerates and capital goods and energy, of course, transportation. I've been talking about that. All the others have come in different cycles. So right now there's all 12 of the sectors are long. We got 90 of the 102 industry groups are long, and this is a pretty robust short-term move, and it's interesting as well because we continue to hold on to that long trade that we put on a number of weeks ago. Just want to go ahead and talk a little bit here about the weekly database. We're at 31.9, and I'm going to play this video. I'll talk about this, and I'll come back and we'll break down some of these elements here from standpoint. So I'll make sure that you folks are getting this information. So bear with me. Let's watch this quick video. It's about 6 minutes, so bear with me because it's going to help you to understand this channel and my analysis much, much better. So hang with me 1 second here. Hello, Bob Kendall here. Every day I go through my database showing you exactly how many buys and sells and what the percentage bullish is. Hey folks, I'm stopping. You're getting the sound on this, right? Not sure I've ever made it clear how this works. Many of you seem to think that it's a lagging indicator because it comes sometimes after big surges in the markets, but I'm going to show you exactly what it is. Let's get into that. So this is the typical view you see of the database. You'll see the bullish percent on the models, both on the intermediate and the daily models. And I want to show you exactly what they mean. I'm going to utilize the equity only chart and break it down on exactly how this is actually a leading indicator, not a lagging indicator. So let's get into that next level. I'm going to show you part of the database that is on our PortfolioXpert.com. This is the overview of the entire database only on equities only. So I want you to see this chart, and I'm going to break down what the percent bullish means and how it functions throughout a market cycle. So this is the breakdown of the chart we were just looking at. This is equities only, so it's just looking at the percent bullish on individual stocks only. But I want you to see a couple things. I talked to you about numbers of 22%, 28%, 42%, and around 68 to 72% is typically where the database will peak. What happens here is very unique. Let's go after the 2020 cycle. You can see I drew a red line at the 22% beginning of trend right here. The market starts to move up, and it went from 22% all the way up to about 50%, but right here is the 42% mark. That's the point where I always talk about we're going to get an extended rally. You can see here, this blue line here going up is the S&P 500. So you can see the participation rate. Once it gets to 42, it starts to extend. And that's typically when the market's going to continue to evolve in its trend. If we look all the way up here to the peak at 72%, you're going to see something very unique. And you'll start to see the database declines, but the market goes up. And let me explain a couple things that goes on. The initial first cycle trades that come in that get us up to the 42% are driving the primary markets here. As the percent bullish continues to increase to the peak, there are more stocks coming into the cycle. So every one of our signals have an expected holding period. And typically on intermediate, it is about 200 to 250 trading days, which is about 3/4 to a full year of holding period. It doesn't mean they will hold them that long, but it's typically what happens in this cycle. So as we go through this cycle, the first cycle of buys coming above the 22 up to the 42 and beyond are driving that first segment of this bullish move on the markets. The secondary cycle that comes in is when we get this boost up into the peak bullish percent. So let me explain what goes on here. What happens is when the database gets to the peak, at this time, the trades that came on early in the cycle are starting to roll out. And so you're seeing the first cycle trade liquidation, and that's why the database is going down. Meanwhile, there is a whole new set of symbols that are being held that are driving the markets further up until the second cycle profits hit. At that time, we start to get back around that 42% and below, and we start to see second cycle liquidation starts to happen as the market starts to decline. By the time we get down to the bottom, typically we'll go down to 30, maybe 20%. This is just the equities only. The full database that I show you every night has a little bit different metrics, but understanding how when we get the signals, how they carry forward both on the upside and the downside. So when we start to see the rotation, I talk a lot about this in that mid-cycle, that tells us that we're going to go to the next level and the markets are likely to extend those gains. Once we hit that peak level, we start to see the database decline. Then this is why we see basically about midpoint of the market cycle on the upside, we saw declines. As we came into 2022, we were in that big cycle decline. We were below that 42% level, and the markets continued to go down. Now we're beginning a new cycle, and we're now above the 22% level, which will indicate that we start the next cycle. When you're watching me cover the database, I want you to understand that there is a forward-looking element. It's not that it reached 72% and that's it, and now it's declining, the market's going to go down. These trades are going to last, and sometimes I will go through the percent fulfilled of the trade, where they are in the cycle, how much of the percentage of the average mean gain that they've got, and that helps you to understand where we are within the cycle, where we're starting that declining cycle or liquidation. And I often refer to it as a rotation. Many times we'll get a rotation right at the top, and then it will be followed by a full liquidation, and we'll go down to anywhere between 40% on an equity only, down to about 20 is typically about it. And then we'll see a cycle begin again, and that's where we are now. So this is an ongoing cycle. If we get above 22, we start to see a bottoming cycle start. The next level, we would go to 42% on the overall database, and that would suggest that we're going to see a sustained market move. And then above that, we have the secondary rotation, which tells us we're in a full-blown uptrend, which is likely to last the better part of a minimum of 6 months, but most likely a year plus in the cycle. I hope this helped you to understand exactly what's going on when I talk about. Okay, folks, I'll come back live. Thanks for taking the time to do this. I think that we're going to see this rotation happen today. And the reason why I wanted you to see this is I want you to see what's going on with the database. So the the scenario that's happening, we're not at 42%. We're at 31.97 on the intermediate database, but we get to 42, that's going to tell us something really big. We're going to find those numbers out here after the close today. These the models get run, and they'll be out roughly around 10 o'clock Eastern time tonight. Will be the release of all the database will be updated. Those of you that are using Wavetech or PortfolioXpert, you know that. But this is what's going to happen. So the reason why I wanted you to see that, because it's very important to understand what these metrics mean to the markets. Now, the fact right now we have, if I go back to the daily here, I know this are probably fairly small on your screen, but I go back to daily, we're at 80%, 79.51%. That's one of those peak levels. So the average holding period, if I go over to our all stats page, the average holding period for these models are about 39 trading days. So, we just in the last week or so, we've had a lot come in. Right now, the average days long right now is 10. We're only 25% fulfilled. So we still have the potential for at least another month. I've talked about this before, where I think we're going to see some positive rotation as we come into year end. After that, if we get the rotation and we get above 42% on the intermediate, then that's going to be a next level expectation for moving forward. And I think it's going to be interesting. I'm still working on this secret project that I'm going to reveal to you, because I think you're going to find it interesting when I finally get the project done. I'm hoping that this weekend I'll have a pretty good chance at moving that to the next level. But there's no hurry to get this thing done. I shouldn't say no hurry, but it's not immediate things that you're going to need to take action on, but it's getting very close. And I want to make sure you folks have a perspective. Just going back to 2020, in November of 2020, I remember telling we got to the 42% level in 2020. And that was 1 year. If you go in November, so if you go out 1 year from 2020, you came right into this year, right into the top. And now, well, like I said, we're going through another cycle. So I spent a fair amount of time on the database tonight, just because I think it's going to help you to have a better perspective of what you're going to be hearing from me. Maybe a few of the trolls that didn't understand what's going on here, maybe that'll help them to understand. And when you're looking at intermediate trends, folks, intermediate trends means the average holding on our intermediate model here is on the optimized is 204 trading days. That's just short of a year. So that's why when these average numbers, and this is a normalized database, this is 16,000 symbols in this database. So there's a lot of this data is very reliable in different segments, and I'm very good at reading this database and what's the rotations going on. What we're likely to see, just quick, since I'm so deep down in this right now, what we're likely to see from the database on the short term is we get to 79, we're going to see a decline in that back to probably 62, 58%. That's that first set of symbols that came in early in the cycle starting to rotate out. And then we had a second cycle to come in that got us up here. This, we'll call it the second percentile range of everything that came in. That's going to keep the market somewhat bullish for the next 20 to 30 trading sessions. So that would put us right into the beginning of the year. So hopefully this helps you to understand where I'm coming from. When I say I'm data driven, this is the data that's driving me, not a trend line, or even the PPMs are helpful, obviously, for trends in the indices, but this is where it's really at. This is, deep dive into the world of stocks. And like I said, there's 16,000 symbols that are being tracked here and run daily. Actually, in a daily run, there's over 10 million calculations that get done on this database every night. So anyway, hopefully that'll help you folks understand. So let's go ahead and move into the S&P here. All right, we'll start with the S&P, and just looking here, we pulled right back into that 70 level. I was just talking about it, and we've already done that. So this should be a support level intraday. So we pulled off the highs pretty good. The algos on the dailies are still got about 3 more days of pretty robust range as far as the PPMs are going to stay in the upper 40 to 50+% range. And if yesterday, if you look at, it was 39.22 was is the 10-period moving average. The low today was 43 overnight. Yesterday we got down to 39.12, and it was 39.03 was the 10-period moving average. And with this rate of change, or this value of 0.48 yesterday, there was only less than a 30% probability for the market to penetrate or to close below that, which it did not. And so we had that upward slope. I talk about this angle of attack all the time, and it looks like the angle's got a few more days. And then if we don't get above this, we can reset this and accelerate this by closing above the 200-day moving average, which is right now at 40.32. So we're going to need to get some closes over the next couple of days above 4,000, or we're going to be at risk of pulling back into these numbers back into the maybe 38.50 or lower. But my expectation is that we'll see this at least attempt to get through this 40-30 level, and then maybe get up to these fib targets that are above the markets here right now at 41.32. So that's where I'm looking at from that standpoint right now. I'll go over and we'll flip over to the weekly chart here for just a second, just to get an idea. Last week we closed at 4,000 on the futures. We're a little bit underwater here. Right now the 40-period moving average is at that 40.53 level, and the high this week was 40.50. So we traded up to that 40. We got rejected. But this is the looking forward here. The PPM1 is going to start to turn up, which means the 10-period moving average will start to roll up. It's at 37.87. So it's currently negative. So it's going to start to go positive here over the next couple of weeks. So that will be somewhere around the major support level. I think that's probably play out major support around 38 handle from that standpoint. But the PPMs look like we should get some stability here. So I won't go into super deep. I'll do this on Sunday night as far as the intermediate trends go. But for now, it still looks like we've got some positive support underneath the markets. The 21-period moving average is still negative. As long as we can stay above that, that's right now at the 39.19 level. So we get to close this week, and we can stay above that. We'll start to potentially stabilize that as a support level. So we'll watch how this unfolds over the next several days. Next, we'll look at the NASDAQ. Same scenario. One of the things that happened, this is weekly. We'll start there. This is much stronger looking than the S&P. We're looking at this 10-period moving average starting to turn up. Right now, it's still massively down, actually, down minus 0.78. So as long as we close here, we come in next week, we'll start to see the downside dissipate. We're starting to see the PPM1 turn up. PPM2 is still got a fair amount of resistance. It's pretty much where we stalled this week. That level is 12,013. The high was 12,118. So we traded just above it, and we're trading. My expectation is that we'll continue to trade into this upper range. I think we'll see the market grid tighten up next week, right underneath this 40, week moving average. Let's go over to the daily so we get set up here. So daily is setting up similar to the S&P. Couple more days with this 10-period moving average is going to be strong support. It won't even consider to break the first derivative, and that doesn't mean it's negative. That upward slope will continue to drive the support. So use the simple SMA 10 as support here, 11,528. So overnight we've had 11,672 so far, low for today. But it looks to me, if we can stay in this upper band and stay positive on the session here at the end, we should see market grid on the daily turn up, while the market grid on the weekly is kind of compressing a little bit, but there's still upside movement there. Next, we'll look at the Russell. These are Russell futures. Much different configuration. I've been talking about this. There's some potential weakness coming in where we could trade down at least to the 21, which is the 1825 level, but potential of coming down and setting up a more of a pronounced pattern down towards the 40. But it looks like to me that the 200-day moving average, 1854, is going to be a pretty substantial pivot area in here. We've already traded about 4 or 5 days above that average, and I'm going to change the scale here just a little bit, but you'll see there's still some Fibonacci targets for 1990 and up to 2093 here on this market. So there's a fair amount of potential upside, and I think we're setting up this pattern here. If we hold the 21, we'll set up a bullish pattern as we come into next week. Next, we'll cover the treasuries. Treasuries continue to have that overall weakness. The PPM1 is down substantially. This represents the 10-period moving average. So that number is going to come down. Looks like everything's rolling over here. So there's going to be major resistance between the 90, we'll call it right between the 390 to 395 level is going to probably be the peak. My expectation is that we stay between the 380 and 392 level. We printed down to 368. I think the other day we got to, here it shows 374, but I know on TradeStation I have a 3.688 print that we got the other day. I'm not sure where. Yeah, anyway, this pattern here suggests there's still some downside. It doesn't look like it's until about mid next week we'll start to get some stability coming back in. So really, we're going to enter into one of these trading ranges. We'll go over to the weekly chart here just for a second, and this becomes more obvious here. And I talked about these fib targets on the downside here, which are ridiculous. 340 is where the 21-period moving average is at 340 exactly, and that's also where the Fibonacci comes in. But we're seeing these weekly patterns, so these are more significant than what I just talked about. The daily patterns are still negative. Weekly patterns are suggesting that the 10-period moving average is going to roll over. Right now, it's still positive, and so that means we're going to stay below that 10, which is the 88 level. I think we can spike up to 92, 95, but we're probably going to stay under 390 and 380, 390, maybe 374 on extreme. We'll see what this sets up for on the market grid as we come into next week. Okay, next we'll cover crude oil. Crude oil under a lot of pressure here. There are some Fibonacci targets here that are starting to come into play. They are 86 was the minimum, and we've obviously penetrated through that. 71, 76, and 62.90. That would put us down toward the 200. This is a weekly chart we're looking at here. So toward the 200-week moving average is where we could end up. The algos are suggesting, however, that we're going to stabilize in here, probably come back into range. We're actually printing right now. The STX level at the moment is 8104. So we have, this is weekly. So if we close below right now 81, we're going to get an STX buy signal, which would suggest sideways for 1 to 2 weeks. So that looks like what the algos are also doing, but there's still all these moving averages are rolling over the top of these, and the PPM1 is down minus 0.98, which is substantial downtrend, and that number comes in at 90.31. So it looks like I've been talking about this 92, 82 level. We could be looking at 76 to maybe 90, 88. So we're starting to really see this market roll over and start to get down towards some of these lower fib targets that are in the pattern here. And what we may end up setting up, and I'm going to draw something in really quick here, is that what we may end up setting up here on the on crude is really a pattern that maybe ends up like some kind of zigzag pattern here, and we get into just basically a complete trading range that ends up just setting up and just staying in this range here. And crude oil tends to go into these little box ranges, like you see, they get into these ranges. So we broke down to the bottom here. We'll see if we can get in here, but I think this is probably down to this fib target. This is probably your range that you want to look at from the standpoint of what's going on with these with crude at the moment. This is the weekly. We'll go into the shorter term spectrum here, and you'll see this decline. And it's interesting that the algos are suggesting that this is basically about it, that we will see some kind of rebound here and come back in a little bit. If you look here at short term, there's Fibonacci targets 8140. That one's been penetrated. 76, we'll call it 70, 76.69, and 73.77. So we're just about on that fib target 2 on a short-term basis. Algos look like they want to stabilize a little bit, but all of the averages here are negative as well, suggesting that there is a downtrend and there could be further pricing to the downside. 73, like I said, is fib target 3 here, and then those weekly targets come into play as well. So there's definitely a lot of pressure on crude to continue to come down. And probably, I'll just come back up here for a second. This is going to drive a lot of the inflation scenario going forward. So, and I have to tell you, and I didn't really cover it when we were in the treasuries, but I think it all ties together with the economy here, is that really the Fed wants to break this market down. And if they're not going to be able to, this is a good sign, right? That inflation maybe is pulling back in. Maybe it comes back to, 4 to 6, but it's funny, and I meant to talk about this. I got so deep into the database, but I'll do it right now. So probably a few people will. Well, if you're watching, then you'll get this. Maybe on the rewatch and the replays, maybe folks will find this. But this is really what the Fed wants to cause unemployment to get rid of inflation. So they have the funny thing. I have some notes here. I meant to cover this earlier, like I said, but you really, their dual mandate is, basically employment and price stability, right? So what are they doing with one of their mandates? They're trying to destroy the job market. And I know there's 10 million jobs out there, but they're not going to be happy unless the employment numbers really start to crater. And then they're going to say, oh, we're finally getting there. They want to destroy demand, and they want people to be unemployed, basically. So they're not bad actors at all, right? So it's just kind of funny that they're saying that this is our mandate, but then they talk about labor conditions, and that's all they're focused on. You listen to every one of these speakers that come out on the Fed. What are they talking about? Labor, labor, labor. Well, the labor market. Well, the labor market. Well, that is really kind of ironic, isn't it? That they're going to have to destroy the jobs so that they can get inflation down, because they have no clue. Somebody said they have an old playbook. There is no playbook. I'm not sure there ever has been. I can tell you, I grew up when I started in the markets in 1979. Paul Volcker was just brought in by Jimmy Carter. And, Volcker was a true hawk. He didn't care about anybody, anything. And the economy was already destroyed in the Carter years. So there wasn't much left for him to destroy. So he just jacked rates up and did some crazy strategies then to get rid of inflation. And inflation was really high. When they talk about 40 years, by the way, this is the highest it's been, that was after inflation had already dropped substantially. Going back to the Nixon days, they actually put on price controls, and I think it was 74 or 75, along the same times that there was the oil crisis going on and oil lines and all that stuff. It was really messed up. I can't argue that it's worse maybe now, but maybe not. But it's definitely different. But this is their goal. They have to destroy the demand to get things out. And then meanwhile, I just saw Biden signed another $10 billion deal. I don't know if it's monies that they already had on for I think the infrastructure for our electrical grid. Who knows? But I don't know if it's new money or existing money. No matter how you put it, they're still throwing billions and billions of dollars. Half of the money goes to Ukraine, half the money goes to us. So that's the way it looks like it goes. So they're still spending money. They're still destroying the purchasing power of the dollar. So I'm done with that. But I think this is everything. Like here with crude oil, we are starting to see the question is this actually demand destruction we're seeing here on crude? I know that OPEC folks are talking about another production cut all of a sudden. They don't want to see this thing go much below 80. They don't want to see Brent go below 80. I believe it's a bit higher. But the point is that this is the only strategy they have is here. And we have to look as we go through these markets every day. I have to look to see where that destruction might be happening. Maybe this is it. Like I said, the projections on interest rates down to 340 potentially, 360, 340 on the 10-year. I went through the yield curve yesterday, so make sure if you didn't see that, there's a section on the yield curve that I went through and the inversion that I'm expecting. And it's, I think, just in general, all of this stuff is tied together. I think crude is trading more like a financial asset than it is a commodity right now. And it's funny because the chart patterns on the 10-year and crude oftentimes look similar. I remember just going through live streams and I go, wait a minute, am I on the 10-year or am I on oil? They look very similar. So just want to unpack a couple of things here because I think these are interesting things to look at here and try to figure out where movement's going on in the economy and are we actually finally seeing that. I don't believe as we come into the employment numbers for next month that we're going to see any big change there. I think it's a little ways in a quarter. And I'll set that up as I get into, as you know, I take off the last 2 weeks of the year. As we get close to that final week, I think it's the week of the 17th. I think December 17th is the last day I'll be live. But if we get into that, I'll try to make sure I cover all this Sorry to get into a little bit of a rant here, but I think it's important. So let's go ahead. We're going to do gold and Bitcoin, and then I'll come back and I'll talk to you a little bit about some of these longer term, one longer term chart that I want to cover with you today. All right, I've been talking about gold coming right up to the 200-day moving average. It happened really fast. Algos are suggesting that we're going to see a flattening out. I talked about this a couple of days ago. We should see it flattening out. There is a pivot number down here that's going to be really important to watch. Mark this one down, 1712. If we bust below that, that would be a problem. But the algos are suggesting that we are going to stay positive on this slope, so we should see really a consolidation somewhere right around where we are right now. I'm going to go on to a weekly. I'll be able to set this up a little better, but we should see a consolidation here between somewhere around 1740, and we're likely to stay under the 1797 level, which is now the 200. And so we're likely to just consolidate. Let's take a look at the weekly chart. And weekly similar. However, weekly suggests that we're going to continue to see this trend unfold here for a number of weeks. Looking out 4 or 5 weeks, what this suggests that this 10-period moving average at 1687 is going to start to turn up substantial up into a 0.5 plus, which is a very robust move. So that'll start to come up over the next several weeks, and that will be your support level. Probably come in around the 1723 is probably the ultimate downside here that we could see. And I suspect we're going to see, at least after we had basically 3 to 4 weeks up in this pattern here, we're likely to see a couple weeks sideways here and some consolidation. But all of the algos are suggesting that we're going to see continued improvement in these moving averages, and that we're going to see some underlying support come into play. Like I said, 1725 is probably the number. Those of you who've been around and watching this channel for a while, you'll know that I talked about the 1725 was originally when we were down in the 16 handle, down at 1620s. That was our first resistance. It's now support in that 1725, 1715 is extreme support. I think somewhere around 1740 to 25 is the more likely support we're likely to see. And then as we go forward, we're probably going to see this market start to stabilize and potentially set up a larger pattern as we go down the trail a little bit more. All right, back on Bitcoin. Like I said, we're seeing a little bit of a bid. This is the weekly chart, and I keep bringing this up because we have some funny. This projections on the downside have no merit whatsoever. They're actually negative. I don't think we can go negative. But what I want you to see here is these PPMs are continuing to suggest this is a disaster mode, and that we're going to roll way down, probably down at least toward 13,000 to 10,000. I don't see how we get out of this. The fact that we're stabilizing and all of the noise that's out there on crypto right now, I don't know. I've been on. There's a really good, a couple good spaces out there that are being run on the whole crypto situation, FTX, all that. That is getting very interesting. I did see a report this morning that the Bahamas, I guess it's their SEC of Bahamas, have basically confiscated all the assets of FTX. Best I can tell, that's what it says. And So that's an interesting scenario. So you wonder, one of the things that does not, that has come up, one of the things that, just talk about this, because if this market's going to collapse, it's, there's all these exchanges that are in trouble, everything. There's so much confusion out there and what is and what isn't. And I told you folks yesterday to really check into some of this stuff. If you had money at some of these exchanges that have filed bankruptcy or have issues and you moved your coins out and all that, there's some kind of clawback rule that they have in bankruptcy court. Who knows? A lot of these exchanges, some of them are offshore, like with FTX, and you got all kinds of regulatory people. So just know for sure they're going to use this moment as a way to get more regulation and to get a foothold on this industry. So even though everybody's pulling everything into cold storage, I'm not sure, I don't know, like I said before, I don't know enough about that to understand what's going on, but I do understand that there are some things that could happen even if you got your coins out of there, there's some kind of clawback clause, and I don't know how real that is or not. So I'm not trying to spread any bad information or anything, but just research this, folks, if you're involved in this stuff. But the algos continue just to project out, going out 3-4 weeks, a complete collapse in prices, and there actually is no support. We're trading below what used to be support. We're at 1660, and anything below 18.225 actually was the old support level. So that's not going to be resistance if you trade it up there, but I'm not sure what would get it there. Market sentiment is so terrible here. It's really hard to believe. All right, so let's go ahead. I have a chart that I want you to show. Let's go over here. I believe this is the chart I want. It is. So I want to just spend a few minutes here. We've got about 12 minutes to go, and I want to talk about a couple things that are out there. And this is the quarterly chart. So each one of these bars is a quarterly chart. We were in the live room a couple of weeks ago, and there's something brewing that's interesting. I think I'll bring that into focus as well here today in this next few minutes. But I talked about this before, that we're really trading in this range here of, and I'll blow this up so you can see it just a little bit better, is the range is right here between the 10 quarter moving average and the 21. And we can even look at the market grid on the quarterly. Market grid on the quarterly, R2 39.85. So we printed just above that. And so this is, right now we're just really mid-November, right? So we have another 6 weeks to go in this year. So the next level above this 39.85 is 41.97. And with this upward pricing coming in here on the 10 period moving average, I think it's possible that we get up into a 41 handle. 41.30, I think I'll cover this. I'll try to get on this as we get closer to the end of the month, but 4100, 4130, 4150, there's a lot of clustered numbers, price projections, all kinds of stuff that I have up there. So it looks like we could continue to climb. And especially, folks, I know I went through a lot of talk about the database today, but especially if we get into the 42+% range on the intermediate database, that's going to tell us that we have more of a sustained move, at least going forward for another quarter or so. So that's going to be interesting once we get into this quarter. I'm going to see if I can do something here. I will attempt to do this. Yes, I was able to pull it off. So this was interesting. Somebody brought it up, and matter of fact, I'm going to clear off just a little bit of this noise here real quick. Bear with me one second. Okay, so what I've got up here, I just cleaned this chart up a little bit. So we just have, this is a annual 1-year chart. And what's interesting about this is we had a high of 48.08 in last year in 21. This year we've had a 48.18 and we have a lower low. So we have an outside reversal going on. And if we close where we are right now, this would be a reversal pattern and suggest that we potentially could decline into this next level down. I know the bears will love this, but the next level down would be let me just see what's happening here. So it would put us the 10 annual moving average. Never said that out loud before. So the 10-month or the 10-year average, there we go. The 10-year average would go back to around 3,100, and that's going to be major support. And I suspect when we get through this, that there'll be a scenario that we could paint around here for a potential major high, and that also plays out in the quarterly chart as well. And I'll try to put this together, but I think it's interesting because the algos are, I'm going to change something here real quick so we can have some predictive ability here. I think there's enough here. Yeah. So this is worth doing for just a second here, folks. We got about 7 minutes to go. I'm changing the algos so they're just looking back, the coefficients looking back only 50 bars, but it's suggesting ultimately that this 10 period moving average is going to roll over. But listen, this is an annual chart, right? So I want you to think about this before you get all excited that there's some big, this is 2 years out. This is 23, 24, what we're looking at here. So each bar is a 1-year bar. So this is really interesting long-term chart to look at. And I haven't really done much studies. I don't know if these algos have any validity at all, but that would certainly suggest we're probably going into some kind of major depression after 24, something like that. But please don't take you guys are going to use that against me. I shouldn't have said that out loud. But anyway, but the bottom line is the upward trend is substantial. So we're not going to get that. What it looks to me is more of, and we're talking about next year is likely to stay within the market grid. So here's my expectation when we get to the end of the year is that the market grid will actually have a downward slope to it. So I'll address this. I've never looked at this chart. It was brought up in the live room a number of weeks ago, and just going through the quarterly chart, looking at an annual chart, these are very long-term trends that are set up, and I think that the patterns that have set up here are very interesting. So I'll just wanted to bring that to your attention and take a look there. So let's all right. So let's go back, and we've got about 5 minutes to go. Just going to set this up, and let's come back on screen here and kind of settle in to the end of the show. Thanks. While we're talking, S&P got absolute hammered all the way down to 63. Yeah, we're looking at 63. So it broke through that 70, and we're seeing that weakness that I was talking about. I thought it looked like it would last for more than 1 hour, but we're coming down into that pattern. So all the way back, we're only up 6 handles now. We were up at almost at 4,000 again, so we can't seem to get above those levels. So definitely a pretty big pullback here. I'll just bring this. That's on screen. You can't see right now, but you can see the futures over here on the far right-hand side. Pretty big decline in the market. So yeah, just like I said, I think that what I was showing you. Let's go back and take a quick look at that, folks. Let's do that really quick because I think that's significant. If we come back back here to the 1 hour chart, let me just put the ES up here. Yeah, so they're just, what it's suggesting is it's just going to continue to get weaker all the way until this 10-period moving average is declining substantially. So yeah, not a good look here. Everything felt good, but not so good. Looks like we're going to continue to fade. As far, like I said, let's go over to the daily charts real quick here. I'm going to jump around it. Just market conditions are warning this. Let me jump over here real quick. Get to the right page. Yeah, so if we come over here and get to the ES, we're looking at all of a sudden S1 is 37. So that's really your marker. And also you've got 39.21. So you still have a lot of support under this market, but we're definitely seeing, we're printing 59 just printed just now. So we're definitely seeing some extremes down here. I think we find support somewhere down here, but the algos are suggesting that even if we do, there's going to be overhead resistance going all the way. So if you have an hourly chart, just use the 10-period moving average on the hourly to, let me bring that up here. This is the hourly. That 10-period moving average is going to be your key level, 69 now. That was going to be support, blew right through it, didn't matter. Algos are suggesting we're going to actually see that average decline, so we should stay under 69. We've even taken out the 21 right now as well, and the 40 is sitting right here as well. So 40 is 60, 62 is the 21. Last print 64.75. So coming into the final minute here, folks, just want to sign out and just tell you thanks a lot for participating all week. This is week number 2 of this new format. I'd like to get more traction, so tell your friends, make sure you share these videos, subscribe, hit the like button, all of that good stuff, and make sure that you're helping this channel to get moving. There's some, I think there's some really exciting things that we're coming into here, and I'm anxious to talk to you on Sunday night instead of Monday. Like I said, I won't be here Monday live. It'll be a Sunday night video, and we'll make sure that we maybe repost it or do something so there's something here at this time, so you will have some perspective anyway. All right, folks, this is it. Great week, good week in the live room. Everything was awesome. Thank you so much, everybody, for participating. Also, look for an announcement that on Tuesday there's going to be a PortfolioXpert presentation. I'm starting that series on Tuesday. It'll be most likely 1 o'clock right now, Eastern time, and also on Friday it'd be 1 o'clock Eastern time next Friday for a Wavetech. So you can show up there. I'm going to do them live on YouTube. That's the plan at the moment. There'll be just pure presentations on understanding the product. There's going to be a series of multiple weeks of this going on. Anyway, folks, thanks again for watching. Look forward to next week, more new stuff coming, and really looking forward to as we get into year end and coming into 23. I think 23 is going to be amazing. I don't know why, but I got this feeling. All right, folks, have a great day trading, and we'll see you on Sunday night. See you then. Bye now.